The U.S. Central Command confirming in the last hour a new round of strikes against Iran, something President Trump warned would probably happen earlier today while at the NATO summit in Ankara.
Hello and welcome to the Week Ahead on Nomura Podcasts. I'm your host Andrew Tysers from our Global Markets Research team, and today is Friday the 10th of July. Well, it's déjà vu all over again this week. That's a fabulous quote attributed to Yogi Berra, with hostilities returning to the Middle East and the focus back on the Strait of Hormuz. Iranian forces hit several ships. President Trump said the ceasefire was likely over, and the US unleashed several rounds of strikes in response. Now the oil price has spiked and bond yields have moved higher as markets price in a higher inflation outlook and increased risk of central bank rate hikes. But equity markets have held in pretty well as we put this podcast to bed, and credit spreads have moved only a fraction wider, and we've seen pretty contained moves in FX markets too. Over the coming week, we'll need to keep an eye on unfolding developments there, but we also have some important economic data being released and a couple of central bank meetings to watch out for too. So this week, we'll check in with Ruchir Sharma in New York. I want to get his take on coming US CPI and retail sales data, his latest thoughts on the Fed and the coming Bank of Canada policy meeting. George Buckley from Nomura's London-based research team will also be along, and we'll be discussing the latest interesting twists and turns in UK and French politics, along with some coming data in Europe. And then in China, Harry Zhang from Nomura's research team in Hong Kong will be with us to preview the key coming monthly activity data, Q2 GDP, and the outlook beyond. Enough there to keep us busy, I think, so let's dive in.
The minutes from Kevin Warsh's first meeting as Fed chair show that a few Federal Reserve officials said there was a case for raising rates, even as they decided to keep rates on hold in June.
Okay, so let's get going. We'll start with the US, and I'm joined here by Ruchir Sharma from Nomura's New York-based research team. Hey, Ruchir, let's start with the data calendar. We've got some growth and inflation clues coming out. I think US CPI and retail sales are on the calendar. Can you share some thoughts on the key data for next week?
Hey, Andrew. So, we have CPI data for June that's coming out next week, and we think that core CPI inflation remained relatively stable at 0.215% in June, following up around the same advance in May. Again, there are a couple of factors here and there. We think the tariff impact is waning. Used vehicle prices, they're moving lower. But at the same time, we think that supercore CPI that actually accelerated in June following a 0.3% reading in May. And that's because some of it actually comes from the World Cup related effect, because we're seeing higher lodging away from home or hotel prices, so as to speak, and they'll probably be offsetting some of the reversal in airline fares. Last month, we also saw that rent-related components, they actually picked up slightly, and we think they're gonna turn lower this month. This is an important month for energy-related components, so that's more about the headline inflation. But we think that as we saw that energy prices declined following the announcement of ceasefire between US and Iran. So we think that headline inflation actually turned slightly negative this time. So overall, based on our forecast, we think that the core PCE inflation reading for June that moderated slightly to 0.27%. That's still 3.3% annualized, so still actually well above the Fed's target. But that's our take on inflation. Looking at growth data, so we have retail sales, we have industrial production, and we're actually expecting pretty solid reading for both of them. So for retail sales, we saw that the unit vehicles sales that actually picked up sharply in June. We saw that competitive deals, Amazon Prime Day, they were actually boosting nominal control retail sales. The only negative factor this month was a decline in gasoline prices, and gasoline sales slightly fell. But again, looking at the underlying trend, retail sales remain strong. And similarly for industrial production, we think if you take a closer look at the underlying pace of production, that remains steady. So growth continues to remain resilient in the US.
Okay, good one. So some more solid data on the growth side there. Hey, switching to the Fed, we had June meeting minutes released earlier this week. I played a little snippet there from Tyler Kendall from Bloomberg noting those. And we've also just heard from Kevin Walsh. He's announced some names, people who'll be leading the 5 task forces he's set up. Can you share your latest thoughts on the Fed here?
Yeah, so for the FOMC meeting minutes, we saw that specifically in the outlook for monetary policy section, it appears to have shifted towards a scenario-based guidance. So rather than emphasizing disagreement over the base case or whether the Fed should hike or whether they should cut, the minutes actually highlighted that there's an overlap between participants' uncertainty band. So most participants discuss scenarios where inflation could pick up, and there were some scenarios where the inflation could return towards 2%, in which case lowering rates would make sense. So definitely this change appears consistent with Chair Walsh's push to downplay an overtly precise policy communication. So that was a particular thing that we saw. Again, there were a couple of subtle shifts in the meeting minutes. But again, so broadly speaking, there were no major groundbreaking news, but yeah, definitely the scenario-based analysis was a new thing that we learned. And as you mentioned, we just received information about some of the people who will be chairing the task forces that Chair Walsh announced at the June FOMC meeting. And it's interesting, we've got a shade of monetarists on the task forces. We've got a couple of people who have been formal central bankers, academics, and some of them are sort of ideologically aligned to what Chair Walsh thinks, but we also have some curveballs. Specifically, as we were looking through the members, we have Raghurajan, who was the former RBI governor, on the balance sheet task force, who appears ideologically aligned with Walsh, and he recently wrote about liquidity ratcheting effects as a danger of structurally large central bank balance sheets, which actually Walsh has talked about quite a lot. And for the same committee, we have Jeremy Stein, who's an interesting choice because he was the one who actually talked about and advocated for a case to maintain larger balance sheets, even when you move away from the zero lower bounds. So that's an interesting choice. Again, we also know that former BOE Governor Mervyn King, he's likely to co-chair the Fed's communication task force. He's a person who actually ideologically aligns with Walsh. In his recent paper, he had actually criticized the Fed's dot plot and how the reaction function and providing a specific economic outlook can actually confuse markets about what the Fed thinks and about how would they react. So we have had a lot of people who've been announced, so it would be key to note how things evolve from here on.
Yeah, got it. Some big names there, as you say. And I thought your comment on the scenario-based analysis was interesting too. I think we've seen a number of central banks sketch out scenarios in the face of, extreme Middle East-related uncertainties. So, giving us that sort of framework of what they might do under certain circumstances rather than exactly what they're going to do. I think that's probably a smart move. And look, Rashir, finally, let's go north of the border there. We have a Bank of Canada meeting to look out for next week. Can you give us a quick preview?
Yeah, so we don't expect any fireworks at the Bank of Canada meeting. Things are relatively sanguine over there. So we think the BOC will continue to hold policy rates constant through 2026. So we have seen that data has been pretty supportive for the BOC. Inflation has been within control, and despite a pickup in headline inflation, which was primarily due to energy prices, the underlying trend of inflation that's remained fairly benign. We haven't seen broader spillover pressures from higher energy prices. And in fact, Governor Macklem, in his comments at the ECB's Sintra Forum, said that following the announcement of ceasefire between US and Iran and a lower move for crude oil prices, they have move towards a friendlier situation for Canada, so as to speak, because now that's taken some of the right tail risk for inflation. So that's a good news for them. We'll be receiving the employment report for June. And we think again that the labor market slack persists in Canada, but again, Canada is dealing with a lot of forces. We have the USMCA, we had that inflation problem and different things. But overall, we think that the policy is well positioned. As for the meeting, we think Macklem is unlikely to guide the markets towards any particular direction of the rate move, and he'll continue to stress that the BOC would be data dependent. Another thing is that in the July meeting, we'll be getting the set of revised projections. But again, given the uncertainty, we still have some geopolitical uncertainty. So I don't think that the BOC would fudge around with their forecasts a lot.
Okay, very good. Rushir, I saw the Reserve Bank of New Zealand increase their cash rate from 2.25% this week, but Bank of Canada, they're going to keep theirs at that precise level. Good one, Ahi. Thanks so much.
Thanks.
Popping over to Europe now, and I'm joined by George Buckley from Nomura's London research team. George is our chief economist for Europe and the UK. Hey, George, thanks for coming on.
My pleasure.
Excellent. We haven't spoken for a little while, so it's nice to catch up. Now, look, on the data calendar, it does look pretty thin across Europe and the UK next week. Is there anything at all worth flagging?
Not much, to be honest, Andrew. The two things I'd probably say are the most important among a very limited calendar would be the UK's GDP number for May, which comes out on Thursday. It did fall last time. Problem is that these things are very volatile on a monthly basis, so I wouldn't be surprised if we see some payback there or some improvement there after the weakness the previous month. Industrial production in Europe, these are important numbers, but just bear in mind that we do know quite a few individual countries' figures already. So we know that, for example, that Germany was up, that Spain was up, that France was flat. Those are big countries in Europe. It probably suggests that we're going to see a small increase or an increase of some sort in industrial production across the Eurozone as a whole.
Okay, understood. Hey, let's switch it up a bit and talk politics. That's probably a bit more colourful and a bit exciting. UK politics, Andy Burnham and Nigel Farage have been in the news. Anything worth noting there?
Well, it won't be long until Andy Burnham is the UK's new Prime Minister, and I think there's a lot of interest, of course, in what he might do fiscally. It won't be too long until we know, therefore, who the Finance Minister, the Chancellor, is going to be and what their angle is going to be on fiscal policy. He's already told us he's going to stick to the fiscal rules. There'll be a lot of focus there. There's also been some focus on reform. Reform is doing pretty well in the polls, maybe not as well as it was doing earlier in the year, and it also has a rival now with Restore. These are two very right-wing parties focused on migration. They're both doing pretty well. I suspect that we're going to see some improvement in the polls for Labour with Burnham as PM, but there was an interesting move from Nigel Farage this week. He decided to hang up his boots as being an MP and then restand for being an MP. Nobody wants to stand against him because they don't want to give him the airtime. So it's a question whether it's going to backfire on him or not, but an interesting move in British politics this week.
Yeah, absolutely. I saw some of those headlines. Very colourful indeed. Hey, and finally, George, just still on the politics, Marine Le Pen also made news in France this week. What's going on there?
Well, I think this is probably the most important news, and Le Pen, there was a court ruling this week which upheld her conviction, but basically said that she can stand for the April 2027 presidential election. Of course, Mr. Macron cannot stand. He's had two terms in office, so it's a question of who replaces him. She stands a very good chance. She's certainly doing the best in the polls at the moment. She's polling more than 30%. Her nearest rival, much less than that, Edouard Philippe from Horizons, he's polling somewhere between 15 and 20%, so much less. But when you ask the question, this is a two-round election, so you've got one round and then they narrow it down to two candidates for the second round, assuming no majority's got in the first round. When you ask the question to people right now in polls, who would you vote for out of say, two candidates, whether it be, let's say, Marine Le Pen from RN or Edouard Philippe from Horizons, it's a much tighter race. And that's the interesting thing. She's very likely to get through into the second round. The question then is, does she win that second round? This will be a fourth attempt at it. The other last point to make about this, Andrew, is that she is replacing what would otherwise have been a Bardella candidacy. He was the young up and coming hopeful in RN, her party. He would have held that, or he would have gone for the position of president if it wasn't for the fact that Marine Le Pen was able to. And they have a different brand of politics within RN. One of them is seen as a bit more market friendly. That's Bardella. One of them is seen as a bit of an old guard, but has changed her spots very significantly over the last few years. So the big question is, can she channel her inner Maloney? Can she become like a Maloney character like we've seen in Italy? And if she can, that will be good for the markets.
Okay, that's really interesting, George. Great to catch up. Thanks so much.
Thanks, Andrew.
Now let's move to China and get the latest from Harry Zhang from Nomura's research team in Hong Kong. Harry, thanks for joining us once more.
Thank you, Andrew. Great to join you.
Terrific. Now, Harry, there's an awful lot of data coming out in China next week. I'm not even sure really where to start, so I'm just going to give you complete free range here. What would you like to highlight for the week ahead?
Yeah, thank you, Andrew. So next week it will be very data heavy for China. So first of all, we will have the Q2 GDP number, and then all the June activity data plus June trade data, imports, exports, as well as credit data. So first, I would highlight the all-important Q2 GDP data. So we expect GDP growth to slow quite notably in Q2. So we evaluated the Q2 GDP growth by analyzing both supply side and demand side indicators for April and May, alongside our projections for June. And then we maintained our forecast for a marked slowdown in real GDP growth to 4.1% year over year in Q2 from 5% in Q1. While nominal GDP growth might stabilize in Q2 on anticipated higher GDP deflator compared with Q1. And then on the same day, next Wednesday, we will also have all the other activity data for June to be released. So we expect retail sales to remain very soft at 0.9% in June, little improvement from minus 0.6% in May, weighed down by payback effects from the scaled back trading program, subdued consumer confidence, and negative price effect from domestic fuel and consumer electronics, which both are driven by imported inflation. And then we recently actually lowered our annual retail sales forecast. We now expect retail sales to grow by only 2.2% in 2026, down from our previous forecast of 3.2%. This is mainly because we think Beijing's multi-year trading subsidy program has exhausted its capacity to stimulate goods consumption, while service consumption proves to be much more difficult to boost through subsidies due to its non-standardized nature. So with those insights, with very limited policy room remaining, we feel it's right to cut the forecast for this year's annual growth for retail sales. And then for fixed asset investment, we expect growth to rise slightly to minus 8.4% in June from minus 10.7% in May, implying year-to-date growth of minus 5.3%. So we see no material improvement in fixed asset investment in June. And the issuance of government bonds, both central and local government bonds, was again lower than the same period last year in June. And then for industrial production growth, we think is going to remain subdued in June, unchanged from 4.5%. in May.
Hey, look, finally, just a quick question. I thought it might be helpful for our listeners. Let's distinguish between all this near-term data and the medium-term outlook. So what's your outlook for China, say, over the next 6-12 months?
Yes, great question. So for China, the medium outlook for us, our view remains unchanged. We think domestic demand remains pretty weak, both in terms of private consumption, retail sales, as well as fixed asset investment. But we do think fixed asset investment is likely to pick up in third and fourth quarter. Because if we look at the issuance of government bonds so far this year, they have been it's quite slow compared with last year. And also the spending of those proceeds come from those issuance are also much slower than the same period last year, especially in April and May. So one explanation could be that because China's GDP growth in Q1 was 5%, pretty robust. So the government may feel there was no rush for them to spend those money in Q2 to save more, let's say, more ammunition for the second half of this year. So overall, we think demand, domestic demand, remain quite weak. But as the fiscal stimulus, let's say incremental fiscal stimulus, may come towards the end of this quarter or earliest fourth quarter. Structurally speaking, we think China is still under the development of what we call a K-shape economic recovery. So on the upper arm, we have this AI-driven boom led by tier one cities. And we also have this lower arm dragged by the persistent downward pressure from the property sector.
Okay, got it. Good one, Harry. I guess what I take away from that is a pretty soft quarter in Q2. And yeah, still a pretty cautious medium-term outlook, though with some sectors doing well and some not doing so well at all. Hey, let's leave it there, Harry. Thanks so much.
Thank you, Andrew.
And finally, just a couple of quick highlights, things we're watching next week from across the broader Asia region. In Korea, the central bank, the BOK, is meeting, and we expect a 25 basis point rate hike in a unanimous decision that would take the policy rate to 2.75%. We also expect Governor Shin to sound hawkish in his press conference, reiterating his view of positive spillovers from the strong chip cycle there, and we continue to pencil in 2 subsequent rate hikes in Korea in October and January. In India, we expect headline inflation to rise to 4.2% year over year in June. That's up from 3.9% due to higher food inflation and higher beverages inflation. We also expect that report to show some continued pass-through of higher input costs, although we have core inflation remaining relatively range-bound there at a slightly lower 3.8% year over year. In Singapore, we expect the pace of GDP growth to ease in Q2 due to some Iran-related disruptions, but to a still quite strong 5.2% year over year. And then finally, in my part of the world, New Zealand June select price data will allow us to fine-tune our forecasts for Q2 CPI there. We have that peaking at 4% year over year currently. And the June monthly NAB business survey in Australia will give us more insights into activity, capacity, and inflation pressures in the land down under. Okay, so there you have it, our views on key developments, major market themes, and what to look out for next week. Now, this podcast has been written by Andrew Ticehurst and the Global Markets Research team and edited and produced, as always, by John Dalton. Thank you for listening in. If you did enjoy this podcast or would like to hear more, please like and subscribe to Nomura's podcasts on Apple, Spotify, and SoundCloud, or wherever you go for your podcasts. And if you have a moment, please leave us a review. And as we always say, it would make our day if you could press a few buttons and share this podcast with a colleague or a friend. For more, log on to nomuraconnects.com to keep up to date and to keep on listening. Thanks, goodbye for now, and see you next week.
In a complex and unpredictable world, where a sunset in one market means a sunrise in another, one investment bank always looks beyond the horizon to help our clients release the potential of tomorrow, today. Nomura, Connecting markets, east and west.
Disclaimer. This content has been prepared by Nomura solely for information purposes. It is not intended to form the basis of any investment decision and is not an offer or solicitation of an offer to buy or sell or enter into any agreement with respect to any security, product, service, including but not limited to investment advisory services or investments. The opinions expressed in the content do not constitute investment advice nor is legal, regulatory, accounting or tax advice and may change at any time without notice. You should seek independent advice as appropriate for individual circumstances. For further information, disclaimers and disclosures, please visit Nomura Connects at www.nomuraconnects.com.